Happy Friday, everyone. It is time for another episode of the Security Token Show. We're your hosts. I'm Herwig Konings, joined by, of course, my co-host, Kyle. How are you today?
You know what, Herwig? I am great today. We have some unbelievable guests joining the show as the Security Token Show continues to have great people from the outside world, from the tokenization space, anywhere outside the US. We are covering the map as this is a global industry, and I'm excited to get into another great show.
Speaking of the global industry coming together, it's less than 2 weeks away now. Tokenize this, folks. Summit.stm.co. Go check out an amazing lineup, 40 plus speakers. We got a former SEC commissioner, lots of CEOs, lots of big banks, asset managers, blockchains. We've got it all. It's happening here in Miami, just 2 weeks away. Man, I cannot wait, Kyle. But as you said, we've got a great show lined up today, starting out with an interview with Archax, actually. So let's just dive right in.
Fantastic. Thank you, guys. This morning, we're joined by Graham, our CEO of Archax. Graham, how are you today?
Yeah, amazing. Hey, Jason. Good to see you again. Thanks for having me.
Absolutely. So some very recent and exciting news coming from Archax. You guys are tokenizing essentially shares of the BlackRock ICS US Treasury money market fund. Tell us about the vision for this product, Graham.
Yeah, sure, Jason. As you know, Archax is a regulated exchange custodian broker in the UK. We can give clients access to traditional securities, digital securities, and crypto. There's a lot of interest in the moment in high interest rate environments to start getting some return on some assets. Stablecoins are interesting, but tokenized money market funds are interesting for people too. So clients can come to us. They can express their interest in investing in a money market fund, and if they want, we can put it on chain for them, and then they can hold it themselves and potentially transfer it as well. So we've done that recently with the BlackRock money market fund.
Makes sense to me. And from what we learned, you guys are working putting this on HBAR. Why HBAR? What's the reasoning behind that?
Yeah, I guess it was our choice, to put it on Hashgraph network. We've been chatting to those guys for a while. Obviously there's a lot of chains out there. We work with a number of chains. A lot of people come to us and ask us to put tokens on different chains. But this client didn't express an interest. We're integrated with Hedera. We can tokenize on Hedera, and there are just some things about the Hashgraph, the network that we like. So both sides have to permission to send, receive tokens to those wallets. That really suits institutions. It's carbon negative, neutral. It's got a good governing council of institutions. The kind of fees are predictable, which is useful for institutions as well. And it's got an extremely high transaction rate as well. So, it's just one of those chains we like the functions of. We understand how to operate with it. It's already connected to us. So it made sense from our point of view.
Makes sense to me. Again, a lot of blockchains are applicable for different use cases. It sounds, based on your reasoning, there's a pretty decent choice for this money market fund. Tell us a little bit about Onera and the P2P swap that's involved with this tokenization.
Yeah, absolutely. I mean, look, one of the Archax has the infrastructure now to be able to create these products. I mean, there's pretty much not an instrument in the world that I've seen that we can't now tokenize and bring on chain. So, I think the kind of creation of an instrument bit is a bit of a commodity. When you speak to these institutions, what do they want? They're interested in the efficiencies of the technology. They're interested in, it disrupting the marketplace, but most of them are interested in distribution. And of course, Archax and others can distribute these products, but, what the world needs is distribution platforms as well. And that's where someone like Onera comes in. So through an Onera router, you can get access to all of the products on the Archax ecosystem. And we've been working with Onera for probably about 5-6 years now, exploring their vision. So any institution, large banks that wants to connect to Archax and others, rather than connecting to all of us individually, can just go get an Onera router and have access to all of our products, and hopefully all of other parties' products as well. So we'll be an asset provider to that network. We'll be providing our products through Onera, but also perhaps our clients want access to products issued by other issuers and other platforms as well, and we'll be able to do that back through the Onera network as well.
Makes sense to me. And keeping into consideration a more high level view at Archax and your partnership with Onera and whatnot, This BlackRock ICS money market fund is a great product that you guys are working on. How does this compare to Aberdeen and what you guys have done with those funds?
Yeah, good question. I mean, look, from a high-level point of view, they're a very similar thing. We worked with Aberdeen very closely on their products, and what we've created, we're capable of doing with many investment managers. Clients come to us, they choose to invest in those money market funds. Those money market funds, or those investment managers rather, do AML KYC on Archax. They understand all of our processes. They get comfortable with facing us as a platform. And from their point of view, we're the client. And then on our side, all of the investors come through our platform to get exposure to those money market funds. And it's that set of books and records that we then put on a blockchain. So if you like, it's our beneficial ownership tokens, we call them bots, that people move between themselves. So we keep our records updated when there's movements on chain.
Good to know. And keeping on theme of money market funds, we also have seen from Franklin Templeton, their BENJI token just became peer-to-peer. Are there any plans for that for the tokenization that you're working on with BlackRock here? So BlackRock aren't working on it with us. We're working on it because of our books and records, but they're already peer-to-peer. So if you come to Archax and you're approved, you're already capable of transferring these between other counterparties that are approved by Archax. So right now, you can invest in a money market fund, you can subscribe, redeem, usually T0, T1 basis. But the world that we're working towards is allowing our clients to transfer them between each other, to redeem them real time, to trade them on secondary markets, and hopefully use them as collateral in the future. So we're starting to get some of those DeFi elements that we're seeing all over Web3 and bringing them to traditional markets. Yeah, and speaking of redemptions and whatnot, we did see that the BIDL fund that Securitize did, does have USDC conversion. Is there something or a feature like that also on the roadmap for the BlackRock ICS money market fund that you're tokenizing?
So we haven't spoken to Circle about it. For what it's worth as well, like that's a great piece of functionality that Circle and Securitize have worked on there. When you think about it, Circle underneath the hood has Treasury anyway. So of course, someone sending in their money market fund is just like what I would call subscribing in kind, rather than them taking your cash and putting it in the money market fund. You're doing half the job for them. So it's a really great use case. There's no reason that if the money market funds we're invested in are acceptable collateral to Circle, that they can't have the same function. And in fact, we're building out a stablecoin platform in the UK. We can tokenize, we can run the treasury for any of these stablecoins. We've got 4 or 5 tokens worth already. And all of the money market funds on our platform can be used in the same way that you've seen BIDL used with Circle.
Makes sense to me. Well, Graham, we appreciate your time, your insights, and you coming onto the show to share with our audience all about what you guys are doing. If anyone wants to get in touch with Archax or yourself, how can they best do that?
Yeah, sure. I mean, you can catch us on Twitter or at ArchaxX or Archax Crypto. I'm on Godfather, or if you just want to drop us a mail, you can get us at archax.com or info@archax.com.
Fantastic. Well, thank you so much once again. We'll be transitioning over to the market movements.
Well, it's time of the week to talk about what the biggest things happened, the market movements, if you will. And of course, we have our guest contributor joining us again, Nico Pantelis. How are you?
Hello, gentlemen. How are you doing? I'm fine.
I know you had a busy week in Dubai last week. That's why we couldn't get you, but we're glad to see you back again on the show. We had some great news to cover, including what we just saw with Graham from Archax there. It looked like Jason might have been on a cruise ship or something, but we had some very good answers to, I think, some key questions around the capabilities and functionality of their new product. Of course, there was a lot of attention around the fact that, BlackRock technically isn't officially involved. We've seen this before in the case of Ondo and others, so this is nothing new. But more importantly, it was on Hedera. Hedera did itself see quite a boost actually on the crypto markets. But nonetheless, as we just heard from Archax, from Graham, that this is a capability that they can offer to other asset managers. And clearly it's got a lot of native features like peer-to-peer trading and other things already built in. So any thoughts on this, guys?
Nico, where does your head go?
Yeah, I think there was a lot of fuss going on after the announcement. I don't know what the fuss is all about because this is tokenization. If it's not done directly by BlackRock, but by a third party, it's still tokenization. So yeah, that's my idea. I think that fuss came more from the side of the guys that were kind of on the wrong side of the trade with these Hedera coins, in my opinion. I think this was a short squeeze, and that's where the
50% from before the announcement. So even though it pumped really hard when people thought BlackRock had actively selected the Hedera blockchain, it's still up significantly since then, and there's a lot of interest on Hedera. We've certainly seen this is not the first fund that's been tokenized on Hedera, and this is certainly that we've seen many big names that have actively picked Hedera as the option to use. So they continue to drive adoption for tokenized real world assets. I know that's been a big focus for them as I met with their team in Houston about a month and a half ago at the Red Swan tokenization event. So another big win for Hedera, and certainly no press is bad press, I think, for them.
Absolutely. There's no such thing as bad press. And the other thing I want to mention is also the peer-to-peer capability that Onera is offering with these types of products, and that it will be multi-broker, multi-platform in the future. Like Graham told us, more the DeFi kind of approach of things, swapping between platforms. That would be amazing, of course. That's what will bring liquidity to the segment. This is what this is how you arbitrage and get things going.
I completely agree. In fact, that's been the talk of town for the last couple of weeks, ever since BUIDL came onto the scene. I think it's really put a spotlight on the demand for just treasuries and, as we coined it, liquidity, funds, tokenized liquidity products. It's the foundation of what's coming, which is why our next piece of news is also relevant. We saw already actually that Archax has this natively built in. We know this is capable with BUIDL, but Franklin Templeton's product, which is the biggest one out there, and operating on multiple chains, like at least 6, maybe more, and they are now officially peer-to-peer. And this is a big deal also because a major distinction I think that's worth noting is, of course, this is a retail product. Anybody can go and buy this as opposed to needing to have a $5 million minimum, I believe it is for BUIDL, as well as who knows what the institutional requirements are for this latest product that we just saw with Archax. With Franklin Templeton, they are really trying to build out and reach the masses, if you will. Thoughts on this one, guys?
Peer-to-peer makes sense. And I think that this is only the beginning, because once it's peer-to-peer within one product, then very quickly you can see how that becomes peer-to-peer amongst all of their different products that they offer. I think this is only going to continue as it's ease for them, it's the efficiencies for them, but it's also just the convenience for the end retail user. As you start to acquire more products, being able to exchange them simply, easily, seamlessly within this digital environment is going to be the norm for these products on the retail side. And so great to see Franklin Templeton really leading the way here. This is kind of Herwig, I feel like we've talked about this many times. Franklin Templeton is huge, but this is how things happen, right? This is how adoption happens, is that Franklin Templeton will use this technology. They will see increased efficiency, or they'll see a benefit, and they'll be able to offer a more competitive product than what other companies are providing or competitors are providing. And that's where they're going to be able to drive customer growth and gain market share even more than they already do, because they offer this product set that then forces the other incumbents to embrace this type of technology, UX, and experience. So I would expect that this is only going to continue, and it likely could be that snowball effect that we look back on 12 months from now or 18 months from now and say, wow, now they have a dozen or 20 or 50 products that are all fungible between each other across this network. Then you start to see other companies getting involved as well in a big way, if not earlier than that.
No, I agree.
Yeah, I guess.
Go ahead, Nico.
I guess we will hear much more about peer-to-peer in the coming months.
Well, peer-to-peer also means a lot of interesting on-chain transaction data that will also start to happen. Again, we don't see a lot of activity with these institutional products, a few redemptions, a few distributions. But when it goes peer-to-peer at this scale, I get excited. And it is going to be interesting to see sort of the AUM growth between the institutional products, which obviously mean bigger checks and potentially larger growth. But with this retail segment, at the end of the day, Franklin Templeton maintains the lead, and we'll see if this continues to kind of gain adoption within these different chains that they're operating on. It's a whole different strategy, though. We did see, by the way, guys, that Carlos Domingo did reference that they plan to expand naturally to other chains with their BUIDL product. So it's going to be a very interesting ecosystem that keeps developing, and not to keep harping on this whole segment. Again, it is the hot topic of town. We did see WooX Exchange announce the fact that they have tokenized T-bills of their own, U.S. Treasury bills specifically, through what they call RWA vaults. Of course, spitting out between the 4 to 5% yield that they are backed. It is not for United States, as well as several other countries like Canada and many others, but it does, continue to create this new opportunity for a lot of different jurisdictions and investors that never had easy access to U.S. Treasury bills, which is just an incredible, safe product, spitting out incredible yield these days. So this is a trend we're going to continue to see. And any thoughts on this whole segment of treasuries?
I think it's important that retail investors are now into this game of institutional products. That's, I think, the most important development with the Woo platform. They're a larger platform for retail trading, mostly for cryptocurrencies. But now moving into RWAs, which is of course great because we need more of this.
Yeah, I think on my side, from a macro perspective, I'm not a lawyer, and so I'm assuming that they're doing this legally. There's obviously the legal concern around. I'm old enough to remember, Herwig, I think we covered this 3 years ago. I think it was Abra out of the West Coast that was doing like some sort of tokenized exposure to U.S. stocks, and they got shut down for offering international access into U.S. products. I know that ADRs exist, so it is possible to get exposure to U.S. assets as a foreign international, but I do know it's a little bit hairier than just simply creating a feeder fund and investing and then offering the synthetic to the outside. We certainly see how that blew up for FTX as well with all the things they were doing with synthetic derivatives. So I'd be interested to see the structure around that, and I just don't know there. The one thing that I think is the funny other side of the equation is the U.S. needs people to be buying treasuries. So if they can show consistent demand for buying treasuries right now, it is kind of a perverse incentive for the regulators to push against it because they need more buyers. So it's kind of an interesting, even if it isn't compliant, do they prosecute this before prosecuting other things? I'm not quite sure.
I think the structure of the offering is provided through Open Trade, I think, from London.
Correct. Yeah,
which is a company backed by A16Z. So I guess this is a better setup than what we saw in the past.
You certainly
also from a legal standpoint.
Open Trade backed by Circle as well, I believe. Yeah, I think you guys both bring up good points. Sure. It's a classic example of the industry, maturing and hopefully growing up in that sense. At the end of the day, it is still somewhat strange for, seeing such easy access to, crypto access, I should say, digital access. But of course, once again, it's not available to folks in the United States. So despite being U.S. assets. Now, speaking of something that is, we're going to move on to our fourth announcement here. We've been covering a lot about Reserve, which is the new platform that's, of course, in partnership with T0 Elevated Returns, who was behind the St. Regis Aspen originally, as well as Science. And they have come together to create this new platform to essentially, as we've talked about in the past, Kyle, aligning customers and owners with utility, right? This idea that now that I own stock, I get perks, whether it's a discount or a free night stay. They plan to offer experiences sort of in a lifestyle manner. We started to see this trend with several other products, even the Tuscany National, something similar that is also available. But Reserve is officially going live May 1st with the St. Regis in Aspen. Now, interestingly enough, under a different ticker. So this would presumably mean it's a different offering, perhaps with a different structure or valuation, et cetera, to the other St. Regis token that is out there. So this will create a pretty interesting, market, example. What's going on with one property. But Reserve is what I assume, the St. Regis Aspen originally kind of like that use case. Reserve is their commercial platform that they plan to roll out to many other hotel owners and similar projects, I assume. May 1st, accredited only, powered by T0. Reserve is going live.
Yeah, it's good to see that. I think one of the oldest trading real world assets is in a revival mode. So this is great. Was always a good idea, in my opinion. So yeah, I'm great to see the evolution, and that the T0 team is still banging on doors everywhere.
Yeah,
good.
There's, to Nico's point, I mean, a lot of those early security tokens are, I don't want to say dead from a finality perspective. There's always the chance that they can continue to revive themselves, but totally inactive. I mean, we hear almost nothing from many of those early tokens that were listed. And we really haven't seen any price action from even the ones that do have activity. So the fact that St. Regis Aspen just continues to drive new adoption, new connections, new partnerships, and it's the best performing security token on the market because of their buyback program. They seem to be doing everything to drive the viability of this product. And so sometimes when you bring it up, people kind of roll their eyes because they've heard the name before. They know that things existed for a while, but it's a great example of a tokenized security. And so shout out to the team there, and both the digital side as well as the traditional people that have embraced this opportunity. There's also a St. Regis coming to Miami, so maybe they'll tokenize that in the future.
St. Regis residents, no less. But also, there is another story here, I think, which is this is T0 starting to lift their head up a little bit, right? Like we've started to see more listings recently. They just did a Twitter Spaces with David Goon and several other big names to really double down on this model, by the way. So this is definitely not just a piece of T0. I think they are really looking at this as a way to expand and grow. So yeah, this is a sign that I think we're going to start to see T0 back in the daily mix.
Yeah, I think that's true. The time is now, it seems and feels like, with Securitize doing great things, now T0 doing next level things, INX doing their thing with Republic. These first generation exchanges need to up their ante and go and play on the main stage, in my opinion. It's time.
It's that time. Well, speaking of the time, we had to go and rattle our mouth last week because we were talking about, or even the last few weeks, of course, with the recent action by the SEC getting active again. Now they have another target, which is MetaMask, which is, of course, owned by Consensus, one of the biggest technology pieces of the industry. I would say a lot of activity happens through MetaMask. And of course, they are now being considered an illegal broker just by the simple concept of, well, if you can set up a wallet and you can accept a token and that token happens to represent a security, well, you have not built in the checks and compliance in order to enable custody of those securities, custody of that in your wallet. And so very simply put, they're going after MetaMask for allowing this through the MetaMask technology. This is, of course, a whole can of worms. This is, of course, another. Joe Lubin, I believe, went and sued the SEC right back. It's it's interesting because as the SEC, of course, is going after the biggest names in the space, they're also going after the biggest war chests in the space. And they're really going to be in for it, I think. A lot obviously riding on this reelection to keep Gary Gensler in play for another term, another 4 years, right, to see a lot of this through. So a lot of that could end up going a different direction potentially, though not that much because, as we saw with Jay Clayton, he was the one who actually left the Ripple case for Gary Gensler to pick up. So a lot of interesting things happening right now in the regulatory sphere. Any insights here, guys?
I've got a lot.
For me,
Nico,
you go first. You go first, Kyle.
Well, I certainly think that the ETH case, the countersuit that you mentioned, Joe Lubin literally suing the SEC to make them declare that Ethereum is a security, is going to be a front runner for our new case of the year. It's probably going to take more than a year to solve. And I know that Ripple, our former case of the year, is still ongoing. But this is the one that's really going to determine what these digital assets are. And I think that this is where the frustration has been for so much of the industry for so long, in the sense that cryptos do not act like securities. They certainly, I think, can argue that they were improper fundraises or they were raised like a security, or the sale itself is a capital event. But the problem is that a lot of these cryptos do not look or act at all like what you see on NASDAQ or New York Stock Exchange. There's no rights to the company's equity. There's no rights to the revenue. There's no value at all for investors. So you can't look at that box and say that that's what these things are. So it's going to force the SEC and the courts to determine, do we need to retroactively look at things differently now? Because that's part of the benefits of the stock market, is that it's so boxed in that everyone kind of follows the same suit, just with different numbers. That's not the case with these security or with these tokens. They're not securities in the same way. So either they're going to have to make a new classification, they're going to have to call them commodities, or they're going to have to try to argue that they look exactly the same as Apple stock. And I think that's going to be a really tough one to prove. So it's really, really interesting to see where this goes.
In essence, Kyle, these things are already determined as commodities in the US, because the CFTC has told everybody that this is a commodity and that there's futures trading on these commodities. It's just, it's already decided. Right. So I don't know what all this discussion is that the SEC thinks that these things are securities. It's just not. It's just digital commodities. That's what these base coins are for these.
Yeah, it's just hard to blame. It's hard to blame MetaMask for being a securities broker when they haven't even called these things securities to begin with, right? Like it just feels interesting. But I think that we're all kind of repeating a lot of the same rhetoric that crypto has. Herwig, where are your perspectives on this?
Business as usual. This is the SEC doing what it said it will do. This is, I got to give some credit to Gary that, he really is not backing down in any form or fashion, despite all of the criticism. He's even getting, Congress people to write to him and say, what the heck are you doing? But meanwhile, he's got a very focused vision and very focused on execution, and he's using all of the SEC's resources to implement that. Now, whether his vision is right, I think is obviously the real issue here at the heart of it all. But this doesn't surprise me in any way. As I mentioned with the upcoming election, I wouldn't be surprised if there are another couple of big names before November that get hit with the SEC. It's just not going to stop until we get some kind of clarity that forces the SEC in tow. And there's little things happening here and there, and we see new bills getting submitted and things like that. But the only thing that I think is going to push us towards clarity is international arbitrage, because we're going to see other nations get ahead, and they're going to see these TradFi turned, digital economies through tokenization explode thanks to the ease of access and adoption. And when that happens, again, over several years, that's when the U.S. has to get its shit together, for lack of a better words. Almost to your point earlier, Kyle, about how it's like, well, they have an incentive for U.S. Treasuries to be bought, and this technology is enabling that. And it's not just enabling access to Treasuries, but it's also going to boost the American economy in a way we've never seen before, the global economy. So, unfortunately, all I can say is we got our hands tied behind our back, and we're just waiting, treading water, I think.
The one other thing I'll add here, and I think that Herwig, you and I, and certainly Nico as well, we are huge proponents of following securities laws and all of the compliance. We've been doing the show now for almost 5 years. So if anybody from the regulators are watching, we did an episode on rescission. So if you guys do decide that these things are securities, they are going to have to attach real assets behind these tokens. And we've explored some of the potential. It's probably outdated at this point because it was almost 3, probably 4 years ago, one of our earliest main topics. But this idea, and to my point, if we're going to declare these things securities, we are going to have to think about, all right, how are we going to attach real value to these tokens? Because as Herwig, you and I have talked about before, I'd love to buy a share of the Ethereum Foundation. And I don't get that exposure with Ethereum, the token, at this point. So figuring out how we can do those things is going to be a challenge that I think is important to work towards in that solution, because in its current state, these assets, I don't think fit my definition of what I'd be looking for from a stock. So figuring out what rescission looks like, where you have a token and you got to reissue a new token that has new rights, has new benefits, and setting up all those things, that is a potential future for some tokens, whether or not Ethereum is part of it. And we have covered that on the show in the past.
I think whether the equity is attached to the token or not, when there is an alternative that lets you get exposure to the equity, to the underlying value, it'll force the real value of the utility token, right? Like right now, that's the only way, if you will, to get exposure to all of it. When you have the right option, right? The markets should be valuing the two appropriately. But that's a whole nother philosophy and a whole nother conversation around, how you value these utility tokens in different ways. So, that's neither here nor there. That is the market movements. Nico, any closing thoughts?
Yeah, again, with this theme, it's all about politics and has nothing to do with the matter. And I guess we're now, guys, in the third phase of the famous 4 phases from the legendary Mark Yusko. First they ignore you, then they laugh at you, and now they fight you. That's in essence where we are. But the 4th phase, we will win as an industry.
There is no doubt about that, because we've got a heck of a show still left. We've got an interview as well as, of course, the Token Debrief and our Companies of the Week. So let's get right to it. Nico, hope to see you again next week.
Guys.
Great. Well, thank you guys. This afternoon, we're joined by Edward Woodford. He's the founder and CEO of Zero Hash. Edward, how are you today?
Good. Thanks very much for having me.
Absolutely. And thanks for coming on. We will be touching on a recent announcement that just came out yesterday involving yourselves and Securitize. But before we hit on that announcement, why don't you tell us a little bit about yourself, Zero Hash, and what you guys are looking to do specifically in the tokenization space?
Yeah, absolutely. So Zero Hash was founded in 2017, and our view is that crypto, stablecoins are a technology versus an asset class. And so by that, we mean that we want to service a whole range of use cases. So Zero Hash provides both the technical and regulatory infrastructure via APIs and SDKs to enable any business to embed this technology. So that means that we work, for example, with payment groups. So for example, we power Stripe's crypto on-ramping and off-ramping products, amongst other things. We've announced other partners such as Shift4. We work with brokerage platforms that view crypto more as a store of value. So we work with groups like Interactive Brokers. You can go and trade Bitcoin in the same way that you can trade a stock of Apple. We also work with remittance platforms, payout platforms globally as well. And in the last year, we've taken our infrastructure and applied it to the tokenization space, which again, we just view as an infrastructure for an application of this technology of cryptography. And so what Zero Hash does, and what we announced yesterday, is we're working with a range of partners, including Securitize, to provide on-ramping and off-ramping 24/7, 365. And so one of the benefits of tokenized assets is the ability to move them real time, anywhere, anytime. And obviously the missing piece of that is the movement of fiat. And so we can provide the on-ramping and off-ramping for a seamless interaction with these tokenized assets that Securitize has launched with a range of well-known partners.
Makes sense to me. And so transitioning, right into that announcement, fantastic. Can you expand a little bit more about, how this impacts the investor experience? And is this available for just primary issuances? Is it also for secondaries? What does the full picture look like with Securitize and yourselves?
Yeah, so we're an infrastructure provider that Securitize has embedded. And so what that means is that when somebody funds in USDC, for example, you're actually legally funding that USDC to zero hash. That USDC gets seamlessly converted one-to-one to US dollars, and then that can be used to trade on the platform. The way that Securitize has productized this is that it's going to be available for different funds. They make that determination with different partners, that's kind of the on-ramping mechanism. The off-ramping mechanism is, for example, if you liquidate, you can get paid out effectively immediately in USDC. And so what's happening there from a step perspective is zero hash is received in USD, and then there's a payout in USDC. And so what you're getting to is a 24/7, 365 movement of funds and assets, which is obviously super, super interesting. You've seen, for example, I think this fiat mechanism is really, really important. So obviously the world is moving to a T+1 settlement process in the traditional securities world. And there was just a report from BNY that 1/3 of trades will struggle to settle because of the slowness of movement of funds. And so, as you look at tokenized securities, which trade all the time, that missing piece on that fiat is really, really important. So Securitize will offer that on a basis that they deem appropriate with their different partners. We are happy to work with any of their partners, and there's obviously some very well-known ones. I think what's really, really interesting is when you look at the tokenized money market fund, and obviously BUIDL is one of the Securitize's flagship products on that piece. I think what's really interesting is that seamless movement between a yield-bearing instrument and obviously a non-yield-bearing instrument, but obviously a very, very highly movable asset in USDC. And so I think that bridge is really, really critical for the evolution and adoption of these asset classes.
Makes total sense to me. And I'm glad you touched on, the money market funds, liquidity funds in general that we've seen really come up on the radar as of late, obviously kicked off by the BUIDL fund and others that have come to light. I think it's a great way to keep, obviously these providers or these investors on chain as much as possible. And like you said, seamlessly be able to, come in and out of those funds. So with all that in mind, Edward, can you tell us a little bit more about, future plans for Zero Hash? I know you mentioned that maybe there's something coming up with Stripe as well. What's the future of Zero Hash look like?
Yeah, so yesterday as well, it's Stripe session, which I think is people view as a payments pilgrimage in some sort. And there was it was shared publicly there about Stripe's expansion paths in leveraging crypto as a payment mechanism. And obviously Zero Hash is Stripe's partner on this and other initiatives. I think from a tokenization perspective, what we think is really, really interesting. Obviously, we offer the funding mechanism, real-time, seamless. What I think is really, really interesting, also another part of that value stack that we offer, is there's obviously a fragmentation of how assets are getting tokenized. If you look at, for example, Franklin Templeton, they've been very public that they're tokenizing on a bunch of different chains. And I think one of the things that Zero Hash can solve for as well, that we're rolling out into production with different partners, is there is this weird dichotomy in the space that tokenization is good, crypto is bad. Well, if you're tokenizing on a public blockchain, how does that exist without interacting with the underlying asset, right? So when you tokenize, there is a gas fee, there is a transaction fee. And so what Zero Hash can do is effectively pay for that gas across many, many different chains. We support 65 different assets, but obviously we support all the big ones that people are tokenizing on, Avalanche, Ethereum. What I think is really, really interesting as well is the recent paper on LRC20 around tokenization on Lightning. We also can support that. Solana. We support all of these different assets. And so as groups are looking to tokenize, they're effectively looking to abstract away the complexity of touching crypto. And that's what we can provide as well. So I think what we look towards the future, we think that there's going to be continued innovation around layer 2s, and there's going to be continued innovation around layer 1s. And groups are going to want to tokenize cross-chain but in a way that abstracts away that complexity. And that's what Zero Hash can do. We effectively offer a third-party gas tank that can be leveraged across many, many of these assets. And the critical point as you look about institutional adoption, there is this mindset tokenization is good, crypto is bad. They do not want to touch, they cannot often touch public chain. So if you're bullish around public chain tokenization, the critical missing piece in our mind is that bridge to allow these groups to tokenize on these public chains without actually touching the underlying assets. And so we charge our partners in US dollars. So that's what really, really excites us. And we think that opens up a wave of adoption across many, many traditional players, and especially moving groups away from private chain tokenization to a more public chain tokenization, which we think has many, many benefits.
Absolutely. That's something that we've been exploring a lot more, right? Moving that transition over to the public chains, ultimately for both, non-institutional and institutional use cases. And I'm glad that you brought up, payments and settlement, which you will be on that institutional payments and settlement panel at Tokenize This. So we're excited to hear a lot more of your insights along with the other panelists. I'm curious, what are you looking forward towards by joining Tokenize This 2024?
Yeah, look, I think for us, the beauty of our infrastructure is that it's agnostic to many different asset classes. And so for me, I'm always learning. And so I'm really interested to hear about other panelists, how they're thinking about this public-private chain. What are the pain points that they're looking to solve? Where is the adoption? Obviously, there's been a lot of talk about tokenized money market funds, and I think tokenized money market funds are fascinating when you think about collateral movement, the ability in this high interest rate environment to actually earn yield. Mm-hmm. I think that's fascinating. I think potentially there's going to be an interest in the use cases between, for example, does the tokenized money market funds in some senses replace tokenized US dollar? Like, how do those things intersect? How do people think about those sorts of pieces? And then where are the other areas of innovation that are actually driving forward with real traction? And that's what really, really we're looking forward to. And, a bunch of the team are going to be there, and we're looking forward to it.
Fantastic. Well, really looking forward to diving into a lot of those critical questions during the panel. Edward, thank you so much for joining us today. How can people get in touch with you if you want to work with Zero Hash?
Yeah, you can just head to our website, zerohash.com, or email us at contact@zerohash.com. And we look forward to hearing from you.
Fantastic. Ed, thanks again. We are now going to be transitioning over to the next section of the show.
And now for the rest of this week's news, we're starting off with a platform launch, okay? Collat Finance, they've officially launched a Solana-powered lending platform powered by a DAO. It actually uses C nodes and P nodes to verify the authenticity and condition of the physical assets, and that allows them to get approved. And once those assets are tokenized, they're made available on that lending protocol. Cool stuff, a big trend in RWAs. And speaking of DeFi, Axis Technology Group, which is actually publicly traded on OTC markets, by the way, they announced a collaboration that introduces a new blockchain platform, also with a DAO governance protocol, where they're minting an initial batch of 50 million CO2 carbon credits with Carbonus. And also Backed announced a partnership with Fortify to enable an NPC wallet integration for custody. This is, typical behavior of tokenization platforms like Backed to expand their infrastructure. Tokeny did the same thing. They announced a new partnership with Talos, allowing an integration through Tokeny there, meaning you can now tokenize RWAs. Considering Talos, there might have been a lot of people waiting to build on Talos, so this is cool. Through Tokeny, but of course they can now also consider this as an option. And by the way, folks, of course you can support multiple chains for just one security token. That's a trend we've seen and will continue to happen. But Tokeny didn't stop there. They also announced a partnership with Globacap to use for their workflow automation with their Dino Network marketplace, right? They say this brings public market-like efficiency to private markets, enhancing execution capabilities and streaming workflows and such things. That's it for infrastructure, but we've got a lot of action and regulation this week still. Of course, we have the MetaMask SEC case, pretty big deal, where they sued the SEC right back, and the SEC got sued again by a lobbyist group called the Blockchain Association and Crypto Freedom Alliance of Texas, suing them over the dealer definition. So the suit alleges that the SEC did not engage with the feedback it received during the rule's public comment period, and it did not conduct, quote, its statutorily required economic analysis. And it's, of course, asking the court to go ahead and declare that the rule is arbitrary, capricious, and otherwise contrary to the law, meaning that the SEC, if successful, would no longer be able to enforce it. And if you're interested on this topic, we actually have a great Security Token Prime webinar with Mark Powers. He was a previous SEC enforcement chief. We discussed this in great detail. Just head over to securitytokenprime.com to sign up for free and check it out. Now, what's happening in the US is quite the opposite of what we've seen happen in parts of Asia. Japan essentially self-regulated its crypto industry, and now Hong Kong officials from the HK Securities and Futures Professional Association are asking the industry there to do the same thing, urging that it is the best way to manage this technology. We won't see that anytime soon in the US, unfortunately. And some last bit of cool news, if you like stable coins, Visa recently launched an on-chain analysis tool for stable coins to track their growth, of course. Stable coins are overtaking Visa's payment processing size, folks. So clearly, Visa is leaning into this technology with their new dashboard. Exciting stuff there. But lastly, I do want to give a shout out to Rumi Khan from Forbes. She wrote a fantastic piece breaking down what the RWA trend is, and she even featured a quote from yours truly. Now, of course, what did I say? You got to go read it to find out. Now, let's bring back Kyle and select our companies of the week.
All right, Herwig. It is time for the companies of the week, our favorite segment, the one with the longest intro, most prestigious award in the blockchain industry. Perhaps, at least in my opinion. Herwig, with that, who is your company of the week and applicant for Company of the Year award? This episode 234.
That's right. There is only 50 or so episodes every year to get selected to be a potential applicant, a potential winner of Company of the Year. Congrats to Republic, who was our winner last year. They'll be at Tokenize this in May, by the way. But not to delay my winner any further, this week, Kyle, Franklin Templeton. Yep, they are the biggest, liquidity product in the space, but I just have to give it to them for being also retail. They are a 1940 Act registered fund. This means anybody can go and buy BENJIs, which I also think is a fun way to say it. But most importantly, they're now peer-to-peer. They've been building a huge ecosystem across multiple chains. And this is important because this isn't just sort of institutions saying, hey, I want to start, getting more efficiency, better transparency, and parking my traditional products in a digital manner. It is retail. Getting access to a Franklin Templeton, a $1 trillion asset manager, a product that they can use within their ecosystem, right? That means that eventually, compliant applications can use this technology, grow the adoption of Franklin Templeton, not directly, but indirectly as a result. And again, because they're already on multiple chains, I see them really doing a fantastic job at doing that growth, doing the integrations, doing what's necessary to reach the retail user base. So I see a lot of exciting things ahead. It is going to be a neck and neck race as institutions dump money into the other similar products. But Franklin Templeton, congratulations. You're my company of the week.
Shout out to Benjamin. They are doing great stuff over there at Franklin Templeton. Also love the BENJI ticker. That's really fun. We cover this at the top of the show. I think that the fungibility here is awesome, and they're just going to be able to capitalize on, the fact that they've done the hard work now of building the infrastructure. Adding new products should be pretty straightforward, and they're really going to reap the rewards at scale. So exciting stuff from FT.
But there's more than one winner every week, Kyle. So who did you pick?
Herwig, I kind of led into it a little bit earlier in the show, but for me, it is everything to do with the St. Regis Aspen ecosystem. My company of the week this week is Reserve, the new distribution platform led by Stefan Debates, who led the entire tokenization efforts of the St. Regis Aspen Hotel tokenization way back in the day. This is the best performing security token. They've launched post-issuance services with discounts to the hotel. They've brought in strategic partners. They listed on T0. They tokenized on the Tezos blockchain way back in the day. Now he's got this reserve platform that's powered by T0's technology to be able to offer other hotels to do the same thing. He's worked with price floors and share buybacks. It seems like he's done almost everything that you could ask for from an issuer with this hotel and has seen success from it. They have disclosures on the property every month publicly. So just major shout out to their team. And now other hotels can do the same. This totally seems like an interesting opportunity if you're a successful hotel to be able to drive tokenization efforts and have a streamlined path to the secondary market, which is what everybody's looking for in this industry. So for all of those reasons, Reserve is my winner. In working with St. Regis Aspen, T0, Science, all the different partners, this is a pretty cool product.
Absolutely. May 1st, officially live with the St. Regis version of Reserve. Very exciting stuff, Kyle. I think that's a great winner. I am excited to see more and more products start to go through this. And it makes a lot of sense. We've seen in the past a lot of different real estate properties, resorts, luxury suites, and things like that offer perks. Why not have a commercial platform so that everybody doesn't have to figure out for themselves? They can just go to Reserve and they've got it all ready to go for you. Makes a lot of sense. And T0 is a pretty powerful partner in making all that happen. Their first use case, right, of kind of T0 white labeling out to different parties to create these experiences in these platforms. Love to see it. It's going to be tough picking our company of the year this year, Kyle. There's so much going on. Congratulations, Franklin Templeton. Congratulations, Reserve. You're the companies of the week. And that's our show, Kyle. Any closing thoughts?
Herwig, I have gotten so much excitement from my network. I know that you have too, for the security token market, Tokenize This conference that's going to be here in Miami in May. We're 2 weeks away. Our speaker lineup is unbelievable. I mean, in terms of institutional clientele that you want to be connecting with, you want to be meeting, they're all going to be there. Of course, so many of the leaders in this tokenization industry, some familiar faces over the last half decade plus, are also going to be representing. We've got blockchains that are going to be there, issuers and clients, as well as friends of our community here in Miami, including investors, if you're trying to do that as well. So it's really a super legit conference. There's not much fluff at all. And we can't wait to be taking the throne as maybe Miami's best crypto conference now that BTC Miami is getting out of Dodge. So for all those reasons, you got to make sure that you're attending.
And we're going for world's best tokenization conference. So definitely.
I think we already have that one.
Oh, let's hope so. Come check it out for yourself and let us know. Hundreds of people are going to be there. It's going to be amazing. The registrations are all over. We've got, of course, the industry, the pioneers that have been in the space day in, day out for years, sometimes 5-6 years or more. But then, of course, TradFi. Love seeing asset managers, banks, big Fortune 500 firms sign up. And we've got the RWA. We've got the crypto community. We've got all the chains. There's a lot of retail activity going on in this space. There's nothing like it to network in person. There's going to be a lot of announcements and a lot of good stuff coming out as well. So be sure to join us in Miami, May 9th and 10th. Get your tickets now. Summit.stm.co. Meanwhile, go to stm.co for everything else you need, RWAs, tokenization, news, etc. And of course, give us a like, give us a share. Let somebody know about the Security Token Show. We do our best to give you all this great quality content every week. Your support means so much to us. And with that, I want to wish everybody happy tokenizing.